Hello traders and welcome to another video review. Today is Wednesday, July 30th, 2025. Let's take a look at the Forex economic calendar for today. Asian session was quite busy with data release. We got data from the New Zealand, business confidence, business expectations in New Zealand, and we got CPI data in the Australia. CPI is actually going down on monthly measure and in the line with the expectations of 2.1% on the quarterly measure. French JPY in line with the expectations 0.7 and the yearly JPY up from 0.1 to 0.3. German retail sales up from minus 0.6 to 1%. GDP in Hungary up from 0 to 0.1. We are still waiting for the coffee leading indicators data from Switzerland that are scheduled for release at 9 o'clock. Then we have Spanish CPI scheduled for release at 9 o'clock, unemployment rate in Turkey, and 1 hour later at 10 o'clock we got German GDP. The market participants expect German GDP to decrease from 0.4% to minus 0.1% on the monthly measure and increase from 0 to 0.2% on quarterly basis. Eurozone GDP is scheduled for release at 11 o'clock. And then we have the GDP from the Mexico at 2 o'clock, and the most important data scheduled for release for the US session are ADP Nonfarm employment change scheduled for release at 2:15. USA GDP scheduled for release at 2:30. The GDP is expected to increase significantly from minus 0.5 to 2.5%. So almost 3%. That's kind of impressive. Bank of Canada interest rate decision, monetary policy report, and Bank of Canada rate statement are all scheduled for release at 3:45. The market participants expect Bank of Canada to hold interest rate at the level of 2.75%. Pending home sales data are scheduled for release at 4 o'clock. Bank of Canada press conference is scheduled for release at 4:30, together with the crude oil inventories. Retail sales data from Russian Federation are scheduled for release at 6 o'clock, and unemployment rate will be released as well. At the end of the day, we got a Fed interest rate decision, FOMC statement, and an FOMC press conference. All of this, as usual, at 8 o'clock p.m. And the market participants expect the Fed to hold the interest rates at the level of 4.5%. So, very important day, very busy day, plenty of data releases, especially the US session will be very, very busy, very, very dynamic. So, stay focused, stay vigilant, as the Wednesday seems to be a paradise for the traders today. All right, so without any further ado, let's switch to the charts. We start with euro dollar. So the euro dollar 4-hour time frame chart is coming off the extremely overbought conditions. We already broke below the technical support at 1.1547. Local low was made at 1.1520, and the bounce from the extremely oversold conditions has been made. Nevertheless, right now this bounce is not that big. So let me just place the line for the yesterday's low and the swing low as well. So 1.1517, yeah, 1.1520, sorry, 1.1520. If there is no immediate movement to the upside, like above the level of 1.1602, then we should reverse and move even lower towards the lows from the June 2025, located at 1.1447. Before the Fed interest rate decision, the movement on the euro dollar might be limited. So please notice the volatility might kick in after the interest rate decision is done. Let's take a look at the US dollar versus the Canadian dollar ahead of the interest rate decision. The Bank of Canada is expected to hold the interest rate at the level of at the level of, let me just take a look, I forgot, 2.75, yes. So what is going on here? Last few days and last week we got very nice movement to the upside, as you can see on this is daily time frame chart. You can see it on the daily time frame chart. So technical resistance 1.3797, obviously on red. Technical support is located roughly at the swing low at 1.3539. So let's just stick with that. So we got very nice consolidation just below the 100 periods moving average, located currently at 1.3865. Now, momentum is positive. It's not quite strong, but 57 points is good enough to break above this trend line. Above this the horizontal technical resistance line and test the 100 periods moving average. Will that be enough to rally? Will that be enough to move like towards the level of 1.4014? Well, we will see. Definitely first we need to break above this red technical resistance, and then we will see what we can do. Most likely, if there is no surprise for the market participants, the reaction for this situation will be back to the range, and the market might stay in that range for quite some time. So please focus during the market data, please, in form of the Bank of Canada interest rate decision. Now, US dollar versus the Japanese yen. Let's go on the 4-hour time frame chart. Let's switch to this time frame chart again. Now, what do we have? Market wanted to rally, but it didn't work, because when we hit 148.82, the market reversed ahead of the interest rate decision, and currently is even trading below 148.06. So we are moving lower. The trend line has not been deeply respected here, so let me just remove this trend line. So we have the clear view of the situation right now. If we break below the technical support, the next target is the 100 periods moving average, 147.51. Momentum comes down from the level of 67 points down to the level of 50. So right now the momentum is neutral, but there is plenty of room to the downside, and there is some room here on a 4-hour time frame chart as well. So we might see the test of 100 periods moving average. Maybe we will even go lower. So that situation might even lead to the test of 147.19. Right, so please stay focused, stay vigilant. It looks like the US dollar versus the Japanese yen is reversing lower. Now, what is the crude oil doing? Because we got the crude oil data scheduled for release today. We got a nice movement to the upside. From the technical point of view, this is the test of 69.46. So this level is the technical resistance, obviously, and now the market is testing it, but the momentum is already extremely overbought, right? So the level of 74 looks like the extremely overbought level, and this situation might be in favor of a bears actually, because we got this very, very narrow zone here between 69.67, 68.94, and this situation here is a very, very tight zone. So a breakout to the upside or to the downside is needed in order to decide whether the market wants to go up or the market wants to go down. For now, the well-established zone is being maintained, the range zone, of course, between 64 and 69, 70. So it looks like the market will be continuing this zone unless there is a clear breakout to the upside above 70, above 71, 72. So please take a look at the current situation. Stay focused, stay vigilant. Possibly if we break to the downside below this technical support, the further movement lower is expected towards the 100 periods moving average. Last but not least, let's take a look at the Bitcoin ahead of the interest rate decision. The Bitcoin doesn't do much, as you can see. The Bitcoin is in the inside of this range, just above the $118,000, just below the 100 periods moving average, oscillating around the level of 50, as you can see on the momentum. So it doesn't actually mean that the bulls are apparently waiting for another breakout to the upside just yet, as the market is in the cool off phase right now. This cycle might last a little bit. However, the interest rate decision from the FOMC later on today might be the trigger for movement to either direction. Right now, because of the short-term uptrend, the scenario is to the upside, obviously. So the scenario is to continue the up move. So we should see the test of this free technical resistance level before we will hit the swing high at 123,265. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.